Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, February 7th, 2019, and we're about 5:15 p.m. I intentionally have waited for the trading session of the evening to open up because momentum in the stock indices is so important, and the question is, what's it doing? Then you have the question of how are bonds and notes going to respond to everything going on. So the grains have already closed. They were down sharply today. The energy prices were basically lower today as well, as the world is fearful of a slowdown everywhere. Now, when I say everywhere, if you look at the UK, it's a big slowdown. If you look at China, it's been slowing down. How long can the U.S. stand alone and look at all of the trade around us coming down? That becomes one of the big issues. Another big issue is Larry Kudlow, the economic advisor to President Trump, came out today, and they are still significantly apart on certain of the trade issues, obviously dealing with the intellectual property. The market got scared with that, especially when it came out that the president was threatening to not meet with President Xi. Obviously, now March 1st tariffs are supposed to go up. Are they going to go up? Are they going to give an extension? Is this a sign that the Chinese, now that we got Mr. Lighthizer, our head negotiator, along with Treasury Secretary Mnuchin, leaving for China this weekend, and when they get there, is this the prod to get everything moving along quicker and then the president can still meet with President Xi, or is that the end of it? I don't know. The end being not for March 1st. That's what I'm talking about, not walking back from a deal as our two negotiators leave. So the stock market reacted to that today. I'm just wrapping things up as best as I can with that. The dollar was up. Most currencies were down on that news. As we take a look on a weekly area chart of closes on the stock indices, they're down for the week 4 points. That is not a very big break. So the market is just sitting here scratching its head, but it's about momentum, and that's what I'm getting nervous about. The market has had a heck of a rally, and as I said today on Fox Business, by the way, I'll be on Bloomberg tomorrow, I think 9:40 a.m. Nothing grows through the sky. So this rally has been very nice, as this break was very nice, but nothing goes through forever on the downside or to the upside. So now the question is, are we getting to a pause area? And that's what I'm questioning. When we take a look at the swing lines, and this is a bar chart, the same bar chart without the swing line, you've got the higher low, the higher high. This is the low that I'm concerned about. We don't know what the action of early evening through tomorrow is going to develop there yet. What I do know is that the 18-day average of closes is offering some upside resistance. You went through, you paused these 3 days, then you got over it and you pulled right back to it. Support still the 18-day average of closes. The upper Bollinger Band, the market tried 4 days in a row or so to stay over and then fell back from it. So we know that we've got resistance areas between the 100-day average and the upper Bollinger Band. That's very important. The other thing that's real bothersome to me is that your momentum is getting away from where it was going sideways over 80. It turned down on the close on Thursday. Remember, this is the beginning of Friday trade, and with the market down but 4 points, you're losing the embedded reading. If you lose the embedded reading, it implies that prices often move back to the 18-day average of closes. It does not mean it's going through that low. It doesn't mean the bull run is over. It's a pause. So that's the first thing that I'm saying. So when that happens, it also means to me that if the market, I walk in the morning and you're down 4 points or more, I seriously doubt the day traders will be stepping in as they would when you have an embedded reading and be supporting the market. That's purely all it means to me. When I come to the NASDAQ, you're down pretty hard. You're losing that embedded reading. It too implies that you might be sinking back to this 18-day average of closes, but very different from the S&P. You now have a pattern of a lower low and a higher high. This is a definitive pause that has taken place. In the Dow, the market is on the verge. The word is verge, that if it drops much more than these 39 points it's down, one of the numbers might get under 80. Getting under 80 is a lot different than settling under it. Do we understand that? Very important. You can intraday flirt with these numbers. It's about how you close. But it too is giving us a warning sign that between the 100-day average and the upper Bollinger Band, there's a swath of resistance there the market's having trouble with. And if momentum's lost, it might decide to pull back a little further, as the Russell is doing the same thing. Russell's down to a 77 reading. If you had a great piece of news tonight and all of a sudden the two presidents were going to meet, you'd probably get a roar in the marketplace, and you'd intraday tomorrow, lose this, and the red line would climb back up. You're at an important juncture in the market. That's all that I can tell about it. The VIX came out of this hugging the lower Bollinger Band. If it rallies, I would expect resistance to show at the 18 and possibly the 100-day average. You tell me what happened. But interestingly, it did not lose its downside momentum. So it has you scratching your head wondering what's going on, other than talking about the momentum. In the bonds, this is how you were coming into today. I'd have the resistance point. This is Wednesday's close. I'd have the resistance at the upper Bollinger Band. It hit it, and an early evening trade, you're backing away from it ever so slightly. Not quite up to the upper Bollinger Band, but the same type of picture. So we can see that what we've got here is still a market that, at least in the Treasuries, is still dropping interest rates. The LIBOR rate today had one of the largest single-day drops in recent times. So that's bank lending, the bank lending dropping off. So I think it was 11 basis points. It's quite a bit, and a lot of mortgages are tied to that. When you look at the daily bar chart, you've got the lower low, higher high. We have not been in a trend. You went up to the upper Bollinger Band. You stopped at that resistance point. If no more makes sense to you, the first challenges of Bollinger Bands often result in markets backing off from them. So the 18-day average often comes into play from that. What else do we have? We have a market that is overbought. Take a look at the reading here. If we come back to the T-bonds, the 10-year notes rather, knocking on the door of overbought, and you're in overbought territory in the bonds already. So you've got to put all these parts together, and that's why I'm using the word, could be a pause coming here. Look where the dollar index went. This was yesterday's work, Wednesday. If you're going to continue, and I go to yesterday's tape, I am sure I would have said, if you continue up, we'll see what that resistance at the Bollinger Band looks like. And there it is. The market hit it and backed off from it. And also very overbought. Stretched out to the downside in the euro, goes to the lower band and stops. So these bands come in for importance because people watch them. It's that simple. You know, I used to love the old commercial from Merrill Lynch when they had the bulls running through the streets, because you want to be with that. If you're the guy standing there waving that flag, and like they do in Spain, you're getting run over. You want to be with the herd, and the herd looks at these things often. And money comes off or on the table, typically off the table when you first hit that. When we're looking at the pound, still problems, but it appears there's a crack going on where the EU's trying to talk and maybe give some better definitions. Don't know yet, but still a market that's been in a very bearish phase, certainly well off the highs that it's had. The Japanese yen, the question is the momentum. The market has both numbers under 20 today, both numbers under 20 yesterday and the day before. But on Tuesday, remember, you can't count Friday. We're just starting the trade. Tuesday it wasn't. Wednesday it was. Thursday, I don't care what tonight's number is yet. It's not embedded. It's a very oversold market that can still climb a little bit to get out of that situation. In Bitcoin, the question will be, do we end up again re-embedding? If you do, this idea that when I lost the embedded reading that would make a run possibly to that 18-day average won't matter. Re-embedding puts all the bear forces back into place, but you're oversold right now. Brent versus WTI crude. Well, you can see the spread has moved out from It's actually gone $2 in favor of Brent because they can cut Brent. Now, something's happening in Congress. They're trying to pass a bill where they're going to go, there's price manipulation by OPEC, which I think there is. It's not a free market, and the right to sue might be allowed in the U.S. against it. Interesting. You might want to read up on that. As for the April Brent, the market today had an outside day to the downside. Normally, I'd say that might be important. Here's what bothers me. You're caught in these Bollinger Bands. Look at how narrow this range is. You're not going anywhere. You're churning and you're spinning and you're building power for the next move. The same is true of WTI crude. You went from the upper Bollinger Band, now you're making a run to the lower. But you're going nowhere. You're just staying in the sideways valley, if you will. Same thing in gasoline. You're just going sideways within this. So, if you think you can catch those type of moves when they break out, that's what trading's about for some people. Natural gas, you have this embedded reading. You know me, I'm focused. When that happens, rallies in this market are still going to be sold. And somewhere along the line, it's February 8th, we're going to wake up, it could be over the weekend, they're going to talk extreme cold, and all of a sudden this market will say it's too cheap, blah, blah, blah. But today what happened is the draw on the stocks was too small to lift the market. You know, probably, I think, the most important thing I do for people is work with them and try to teach ideas. And in my morning subscriber video, I'm able to let my wings fly. This is how the charts look in that. They're very different than they are here. I explain what all these lines are. So if you think you're a technician and you're looking to learn more, I might have something that you like to see each morning. I review 40 charts. The first thing I do, I get here early, and then at 8:30, I wait for the meat markets to open, and I begin recording. And I record in this sequence all the time. And from that sequence, I go through each one of these charts, and my goal is to tell you what I think the chart action looks like, what the active traders are doing. If there's something fundamentally that happened important, I'm able to mention it. Technically, I can mention anything I see there. But what I'm able to do is say, buy here, sell there. This is where I think the pros are coming in for this type of trade. Here's where I think they'd come out of the market, and here's where I think they think they're wrong. I can't do that in these type of tapes, these videos you're seeing here. I can only do this there. It takes me each day about 14 minutes or so. I'm given an approximate time to do the whole thing. But the beauty is I do it in a sequence so you can skip around it or go to the part that you want. What's it run? We were just calculating it. It's about 28 cents a day. First 30 days, $7.95. You don't like it, you quit. So your risk is $7.95. You like it? Right now it's $15 every 30 days afterwards. But real important, I throw in a $40 value of our phone application. That's what it would cost if you didn't get it. Now, our phone app, if you wanted to upgrade for, I think it's $5 a month, you get real-time quotes as well. So now you've got the quotes, the charts, and everything on that's delayed by, I think, 10 minutes or so. But it's the news that we have. There's an awful lot of information. And as my videos come up, we use a push notification that you'll get that push thing instead of a text, no charge. It just tells you, hey, there's a notification. You click it, it opens up the app and plays my video for you. Pretty interesting. So if you'd like to get it, you can call my staff. If you haven't, if you want to do it over the internet, you can just go to our website under either research or education, go to morning subscriber video, and you can click up here. It'll take you right there as well. I'm Ira Epstein. It's going to be an interesting day tomorrow. And remember, we get a USDA grain report tomorrow that's important because we haven't had any of these supply-demand reports since the government shut down. It's going to be a big one. I'm Ira Epstein. Have a good day.